Earlier this week, I hosted a webinar sharing what I discovered on my recent road trip where I visited a number of amazing regional hotspots where I plan to invest myself personally in 2021. Now, if you missed that event, please go to the webinar section of the Investor Toolbox. You'll see a link there which will give you access to the replay. You'll also find a link at the bottom of this week's newsletter, this week's Property Views. Now, there were some shocking details that I really felt I needed to share. I got a few big surprises and some massive challenges that I uncovered that I really do feel every investor planning to invest this year simply must know. Now, I also believe there's ways we can get around it together, but it's going to be challenging. I also shared why I think this moment in time may just be the single safest time I've ever seen to invest in property. For me, property investing really does hinge off two key elements, and that is risk versus reward. And really, when you assess the risks, it's fascinating. During my road trip, I found myself considering the three primary elements that I believe constitute the potential risks around property investing. And as I did this, I found myself growing more and more confident and excited about adding, as many properties as possible in 2021. When it comes to risks, the number one most pessimistic scenario would be, what if the national property market crashed? Now, we've heard it said before, we've had all those doom and gloom, forecasts and so forth. We've weathered other crises, and the pandemic we've just faced was another, unprecedented event. Now, of course, what we've also witnessed, and a lot of people got, surprised as to how quickly the federal government stepped in to protect the property market. And analysts now better understand the importance our federal government and state governments and the RBA, all of those parties, how they all, want to shelter our housing values. There's just so much that hinges off it. More and more investors also now realise that the federal government is heavily invested in protecting our property market. Many believe they'll go to great lengths to make sure it can't fail. And don't forget that we still have plenty of cards left to play. We are the number one most preferred country for high net wealth individuals wishing to migrate. The Australian federal government, it's in a perfect position. They always have the ability to turn on an immigration tap, specifically targeting wealthy migrants that will easily buffer any housing slump that we may face in the future. Now, they don't want to do that, and obviously we haven't been able to do that, but it's certainly, as we now look at Australia and the fact that we would be considered one of the safest countries, with a AAA rated banking system, a great economy, world-class health system, plus we're an island perfectly positioned to close our borders in the case of any future pandemic. Our popularity is expected to skyrocket over the years ahead. So it's a big one if we ever need to use it. The second biggest risk to investors would have to be an inability to service the holding costs of a property. Now, we've seen this over the years due to, people buying the wrong properties, really. Stealing away their lifestyle through stupid, holding costs, just bleeding, that lifestyle money away. And it's no one wants that scenario. But that's getting harder and harder to do, even for the inexperienced investors, and that's due to record low interest rates. Now, I'm not encouraging that. I want you to buy great, but even bad choices don't look as bad with interest rates as low as they are. And look, with thousands and thousands of people still constantly relocating out of Sydney, it's really exposed to Sydney and Melbourne into these regional locations. It's exposed a real shortage of rental properties. Rents are skyrocketing. Hardly any properties available to rent. It's just this perfect storm of elements that really do make holding costs, the lowest I've ever seen in my 30 years of investing. And of course, with every, property investment, you've got to consider its performance. This is what I consider the opportunity cost of investing. And if you don't assess the opportunity cost, poor performance can really hurt your ability to build wealth and reach those wealth goals that you may have set. Now, once again, it's important to consider how important, when it comes to performance, our federal government feels about protecting the Australian property market and making sure that it remains strong. Historically, the national housing market has averaged 6.8% growth. Apartments less, and there's a bit of a bleak forecast for apartments looking ahead, but not so the Australian housing market. I've always personally used 5% to forecast, the future values of my properties within my portfolio. And I think it's now very practical to imagine that this probably matches up, almost ideally with what our government and the RBA would like to see our performance looking like over the longer term. But due to, the affordability of these regional markets and a massive undersupply of available properties, even the RBA is forecasting a 30% capital growth figure for the Australian property market over the next 3 years. Banks are forecasting it. Everybody can see there's a boom on its way. As always, it always boils down to supply versus demand, and obviously, it all points towards opportunities for property investors that are targeting these regional hotspots. But there are challenges. Supply levels, are so low that it's likely to mean that most investors will find themselves stuck on the sideline, particularly when it comes to land, a very important ingredient to get the best properties, the new properties with maximum depreciations, etc. And we're going to have to fight to get hold of the best stock. This year, we will need to link arms tighter than ever before. Fellow investors, we can all stay individual, but we need to link arms and unite our buying power. To learn how I plan to step in and help as many investors as possible, please register your interest for what I'm calling a it's mentor programs, but 3 new mentor programs that I'll be launching very, very soon. This could be the difference. It really could be the difference between you having the ability to take advantage of what I believe is the best window to build wealth we've ever seen, or potentially, unfortunately, miss out. So please register your interest. We'll share all of the details about these 3 levels of support that I want to offer you personally. Now, there's a cost associated to each of those 3 levels, but when you have a look at the details, that's only designed to weed out the people that really are just tire kickers. We want to identify the people that truly do need our help. Every cent that you pay is only a retainer. It'll be fully refunded to you, when you go ahead with a property purchase. And if you're unable to secure the finance, those funds will be refunded to you. So there's 0 risk in it for you as a purchaser, but a heck of a lot to gain. And like I said, as you get to understand the challenges we face, you'll realize how important it is and how much, like I said, today it's more important than ever for us to link arms and unite this buying power. Please go ahead, register your interest below, and we'll send you all of the details. You can make a very informed decision, but I think you'll find that it's exactly what you're going to need to exercise your property strategies in 2021. Take care, register below, and we'll talk real soon.
Location approved, property approved, safety guarantee. Invest approved, protecting you every step of the way.